Okay, so you're welcome. Good morning, all. And this morning we are going to be talking about naked trading strategies, and we are going to be talking about also how to exit the market. Because yesterday when I posted a video on the group, somebody was asking me how come I was able to hold that trade to that extent. And it is very, very important that we know how to exit the market. The one is to make money from the market. As you are placing a trade, your trade is in your own favor. And the next, the other one is to also sustain that profit and to get out of the market. So, naked trading is actually trading without indicators. If you can see my screen very clearly, there is nothing like indicators or robots or all those things. It is pure price action. And in naked trading, the major what we use to identify the market is to know this turning zone, support and resistance zone. In trading, there are millions or thousands of trading strategies and entering strategies, but as a trader, you don't need to learn all. Forex is very, very wide and is complicated. If you want to learn everything Forex, you cannot do it. So the best is to learn one particular strategy that works for you. If that strategy works for you, you stick to it, you practice it, you learn it over and over. And then once you become expert in that strategy can make you a millionaire in trading. You don't have to know everything in trading, just one thing. Do it over and over and you become an expert. So let us talk about, we are going to be talking about how to exit the market, and again, we'll be talking about risk management this morning, because the risk management is one of the biggest challenge all traders have all over the world. Most people have lost millions of naira in this business because of they don't understand what it means by risk management. So if you don't know how to manage your risk, I tell you the truth, you may not last in this business. So like I said yesterday, support and resistance are those places where price has touched and bounced back repeatedly. Those are turning points. Turning points where price moves, then comes back, price moves. Somebody said my trading view chart is not showing me 15 minutes, 1 hour, 4 hours. You have not added them. I will show you how to add them. Look at your I'm going to shoot that video today about trading view. Look at your chart. Look at your this is all your time frames here. If you click here, you see all of them. If you see here, you will see all the time frame that I have. So now, if you want to see them on your chart, just click this one, favorite. Once you click this star, you'll be seeing them. I'm not supposed to be seeing this one because I don't like using them. So once you click all these ones, look at them, they are appearing on the screen here. If I want to see more, once I click the draw down, it's the same thing with a tab or a phone. By the time you click this star, add to favorite, you will now see it on the dashboard. Have I answered your question correctly, Mr. John? Do you understand what I mean? Just come here and add them to your favorite. You will see all the time frames and all the numbers here. Just add them to your favorite. Once you add them, you click add to, look at add to favorite. Once you click it, it will now be showing on top here. Trading view, if you learn how to use trading view, you enjoy trading because it's very easy to analyze the market with trading view. So Use trading view to analyze the market. All right, so let us go straight to this turning point. So now, look at this market. These things work. Anybody who is telling you that trading is hard, that person, people will deceive you with all those their robots and um, their proprietors and indicators just to make trading very difficult for people to do. So let's look at Euro USD. This is purely an advanced class, so if you are not understanding some of these terms, you are going to understand them much more later. All right, so this is Euro USD. You can see that this place is a very clear turning point. So whenever price touches this zone, price will do two things. It's either price touch and bounce back these zones, or price break through these zones. Like I said, support and resistance are not they can be broken, of course. Sometimes market can break through these zones, and when a resistance zone is broken, it is now called it becomes a support, and when a support is broken, it becomes a resistance. So once price approaches these zones, there are candlestick patterns that you can use to trade these zones. Candlestick patterns, we have different entries on these zones. Once price up, that's why as support and resistance traders, we don't enter the market we don't trade every day. If you are trading every day, it means that you are drawing your support and resistance maybe on a place that is not really a zone. But if you are trading is sometimes a week, you can have 3 trades or even twice, because this price don't touch these zones every single day. It sometimes even takes 1 week for price to move from this zone to this zone. So as a price action trader, you don't trade when price is on all these places. All these places, you don't trade when it is not a zone. All these places are not a trading zone. These are called no man areas. It's a deadly zone because you don't know what will happen next. We only trade when price approach a zone. That means price must be either on top of this place, this is a zone, or price must be here before we can place a trade. So you need to learn how to draw this zone. That's why throughout this week I have been talking about support and resistance zone. Trust me, if you do this thing correctly, very well, learn how to draw this thing correctly, you will see that trading is not really that difficult the way people think it is. It is very easy to understand. Once you understand drawing support and resistance zone, you learn how to manage your risk, then you have gone very far in trading. Of course, sometimes we may not win. Look at this zone. Look at this zone. It's a zone that price touch and bounce back. If I carry this thing and cross here, if I carry that thing and cross here, to know if this is a zone, just click. Look at touches. Excuse me. All right, look at touches here. Look at touch here. This is a clear touch that is a zone. Look at another touch here. So once you have seen and you use longer time frames to draw this zone, once you have seen these zones, you just watch the price as it approaches these zones. These things worked very well. It works for everybody. Whether you are trading stock market, it respects these zones. Just be comfortable drawing these zones. It works with any market. If you want to know how it works, if these places are actually zones, you can even use a line chart. When you click here, you see hollow candles line. By the time you use a line chart is easier to identify these turning points. All right? Line chart will tell you if this is a strong zone or not. So learn how to draw these zones perfectly. Perfectly. That is why you see me talking about this zone perfectly. Once you learn how to draw these zones, we are going to talk about candlestick patterns that you expect. You say this is a zone. You can lock it. Look at the key here. You can lock it with this key, or you can also unlock it. This is a zone. Let us lock it. You don't need complicated trading strategies. Be comfortable drawing zones. You'll be trading your trading, making profit every single day. This I'm telling you is the secret about trading. All right, now, once you discover all these zones, whenever you are drawing, add the wick. You can, if you look at this place very well, this is called wick. This is an advanced class, so I believe all of us know what is wick. This is a wick. This is a wick, and you add the wick and the body. Start with the wick, and then you can now use the body to add the body to draw your zones. This is also a zone. It is not a straight line. It is actually a zone, not one straight line. So when price approaches that zone, as a naked trader, you are looking at for candlestick patterns. Let me show you candlestick patterns that you can use to know the direction of. Okay. Now, whenever you approach a zone, all right, whenever you approach a zone like that, you see patterns like this. This is called bullish engulfing pattern. If you see something like this on a zone, on a clear zone, maybe on this kind of a support zone, if you see something like this after touching, when you have drawn your support and resistance zone and you see a candlestick appears on this zone, this kind of bullish engulfing appear there, it means that the market may likely turn from there. So what you do as a naked trader, you place your buy stop above this line. Buy stop. Put your stop loss down the candlestick. It will go in your direction. It will go in your direction. So that's the candlestick patterns you can use to trade these support zones. Now, if it appears on a resistance zone like this, if you look at this very well, there was a trade I took, and I'm still in that trade up to now. Euro USD. This is Euro USD. After this candlestick formed, I was telling us in the class that day that the market is going to go down from here. It was from here, and since that day, the market has been coming down till this moment. I am still in the trade. Let me show you the pattern on this candlestick. Look at it here. This is called bearish engulfing pattern. For this bearish engulfing pattern, it appears on a resistance zone. This candlestick is bigger than this one. Look at it here. It's called bearish engulfing. Once you see this thing, the bearish candlestick is bigger than the one that is previously before it. Is a clear indication that the market may turn from here on. If it appears on a resistance zone as a naked trader, you take notice of that. You place your sell stop below this candlestick. Then you put your stop loss. Your stop loss can be placed up here. You enter from here, your stop loss from here. That is another pattern on trading on zones. Let's look at the next candlestick formation. This is still okay. Now look at this thing, this candlestick. This candlestick is called kangaroo tails. This is a bullish kangaroo tail, or some people call it hammer, shooting star, the plenty names. This is called kangaroo tail. If this appears on a resistance zone, it means that the price is going to turn. If something like that with a long wick, a long, very long wick, if you see something like this appear on a resistance zone, it means that price is going to turn. So what you do is you are using a daily time frame or a monthly, a week, 4 hour, 1 hour, you take note of this kind of something. That's why after drawing your zones, you can now use maybe a different candle. After using a bigger time frame to draw your zones, you may use a smaller time frame to monitor this particular, to monitor the zone, the pattern, the candlestick pattern that will form on that zone, so that you can have an early entry. So watch out for something like this for a zone, on a zone. Then this, it could be even green. This one too could be red, but they all mean the same. This can appear on the support zone. If this appear on the support zones, it means that price is about to turn towards the upside. So you'll be looking out for a buy. Those of you who are new, it's okay. Don't overwhelm yourself with this explanation. You can go through. We are doing it every day. So with time, you understand all these things we are talking about. Anybody who tells you that support and resistance does not work, look at all these touches. It works like crazy. Also, say, where are my resistance and support zones? Austin, these are support. These are the support. Support is up. When price touch up, somewhere up, whenever price moves to a place and touch the place and bounce back, it means that that place is called a resistance zone. If price touches a particular zone, look at this place, price has been touching here and bouncing back, it means that it's a resistance. It can be called also ceiling. But if the resistance zone is broken, for instance, price can break through this zone and come back and do a retest. So whenever price breaks through this zone, this place becomes support. So resistance can become support. Then the down, which is floor, is also called floor, is the support. That is what support and resistance is all about. So we are talking about how to trade it. Now let us talk about risk management, because this risk management issue is a very big topic. So this is how to trade your support and resistance zones. These candlestick patterns are indication of, yes, they are talking about reversal or retest. That was a different strategy, but this is another strategy to enter a trade when price approaches a zone. You can say, okay, price, I don't want to enter. Let the price do something like this, up, then come back something like this. Then give me a candlestick formation of a bullish candlestick, I can enter. That is another strategy. That is what they call, a retest. Price came down, maybe price was coming down from this up, maybe coming down from this up. It may do some consolidation, then went up via the came back here to do a retest, and then before taking off, after as it's taking off, maybe you're using a 1 hour candlestick to monitor the movement on this zone. Once you see a good candlestick formation, like the bullish engulfing, you can place your buy stop from here. Then you can now take your profit, maybe on this zone or on this zone. That is how you trade the zone. So let us talk about risk management. Now, all of us should just have TradingView on our phones, our laptop. You can sign in into TradingView. Once you come to tradingview.com, sign in from here. Look at me, I've already signed in, so I don't have to sign out. Once you sign in from here, you can now change all these candlestick patterns to your, we'll talk about that next time, to your choice colors. This bullish is green for me, and bearish is a red candlestick. So once you are comfortable drawing this zone, then you are joining half of your journey in Forex. In fact, 60% of your journey in Forex, you have qualified 50%, 60%. You just have to work on the risk management and the other strategies to continue your journey in this business. You don't have to learn everything. Not everything. We are not here to learn everything in Forex. We are learning only a few things. Frank, this class we'll talk about it. But just understand the beginning. By the time you finish understanding the beginners class, these ones also will be easy for you to understand. It takes time to understand. Just give yourself time. All of us started like that. It was confusing the day I started watching these things. All right, so let us talk about risk management. This topic of support and resistance is a very big topic. We'll continue talking about it until all of us are comfortable drawing these zones. As you get to home right now after the class, just draw these zones on your charts. Draw them as many currency pairs as possible so that you can, once you are comfortable drawing them, then you have done something marvelous for your trading. Now, how do we manage our risk in trading? How do we manage our risk in trading? Let us talk about risk management. Yes, the top is the resistance zone. The top here is the resistance zone, while the down is support. So this is the resistance zone. Resistance zone can be broken. Support too can be broken. If you look at here, market was touched, it was resistance until it came down here to touch support until it broke through the support. It broke through the support to this down. Now it has gone up here, but this support has turned to resistance now. Price touch here, October 19, it came down to this place, it came up again to touch, and then price has started coming down again. So this is what the place is. It's a zone. It's actually a zone. So whenever price is approaching these strong zones, you look at for candlestick pattern that will convince you that the price is going down. You place a sell or a buy. So for instance, let us analyze. Let us talk about risk management. Now, if you have not watched that video on risk management, this is for you to. These things, I want every new person to understand these things. Most time we lose money in Forex because, so for you to manage your risk, the first thing you have to do is to come to position size calculation. Once you click on position size calculator, you will see this particular website. It's called myfsbook.com. Myfsbook.com. You click it. By the time you click it, you will see this is what you're going to find out. Let's say you have an account of $500. For you to manage your risk properly, what you need to do is to type $500. Your account, you should not risk more than 3% of your account, 3% or 2%. If you are aggressive, it should be 3%. If you are conservative, it should be 2%. So let's say you are an aggressive trader, you shouldn't lose more than 3% of your account. Now you have $500 account, you want to trade Euro USD. Let's say your stop loss. Let's say your stop loss. If you don't know what is stop loss, it's okay. Tomorrow is basic class. You can join to understand all these terms. Let's say your stop loss is up here, where I'm putting my cursor here, and now your entry price is here. So if your stop loss is here, maybe you're entering from here. From here to this end, it's about 71. This tool I'm using is to measure pip. That tool is to measure pip. So you're entering from here. Now drag it upstairs to your stop loss point is 68. Let's say 75 pips. All right. Now once you have gotten your 75 pip ratio, you type that number. That number is 1.11955. That is your stop loss number. You type it down. That is 75 pips stop loss. Now you come to your position size calculator. You type, let's say stop loss pips is 75. Now you've gotten your stop loss entry number that you're going to type on your trading platform MetaTrader 4. You come here and you click calculate. Once you click calculate, this is what you find. You see that you lose in case the trade go against you. This is your account size, $500. The unit you are controlling is 2,000 units, and your account size is $500. What you are going to lose is $15. So this is the lot size you are going to use. This is 2 micro lots. If you don't understand lots, tomorrow is going to be we are going to be talking about all that. Lot to determine how much money you lose or how much money you gain. So this is the lot size you are going to use. But most people have a $500 account and they want to trade a standard lot. So maybe some people are using, let me say, some people are risking like 50% of, let's calculate 50%. See, some people want to use even 50% of their total account, which is 3 mini lots. They are using this kind of a lot size for a $500 account. If the only one trade you will take, if it is against you, you are out of the business. What differentiates professional traders and amateur is this. Amateurs want to make money overnight in Forex. Let me clear you. You cannot make money overnight in Forex. If you want to be in this business, it's consistency. It's consistency, not overnight. But most times we want to make money sharp. We have pressures, financial pressures, so we have small lot size, we have small account, and we want to make it each just 1 minute. I mean, within a day, we want to grow that $100 to $1,000. So you start taking heavy risk. But with this calculator will guide you before you place any trade. You have to come down here and see what loss size you are going to use. Once you know your stop loss, your entry point, and your stop loss peak, once you have known that. So now, if you have this kind of peak number, this for this side, you are taking it to maybe 2 positions. You want to place trade 2 times. What you are going to do, you are going to divide this. You're going to divide this. You're going to divide 0.0 you're going to divide it by 2. If it is divided by 2, what you're going to have is 0.01. Let's say you have a profit target that you want to twin trade, or you want to split your profit target. It means that you are going to place your trade twice. If you are going to place your trade twice, take profit 1 and take profit 2. With this lot size calculation, you are going to place it with 0.01 lot size, not more than that. So in case you lose the trade, you are going to lose only 15%, $15 of your account. Okay, let me do another one. Let's say you have $700. You are risking 3% of your account. Let's calculate. You see, $21 is the only thing you lose. This is the loss size. You're going to divide this by 2, because you're taking 2 positions. If you're taking 3 positions, you're going to also divide it. If it is 3 positions, this is the lowest loss size, micro loss. So you may just take 2, because micro loss, this is micro loss, and 0.01 is the least loss size. So you may just take 2 positions. That is how you calculate your stop loss. If your stop loss pip is not big, maybe it's just 45, 55, maybe your stop loss pip where you are entering and your stop loss is not too far from each other, you make more money. If it is 54, if you calculate, it has increased to 3 micro lots. So if it is 3 positions, you divide into 3. If it is 2 positions, you divide into 2. Right. That's how you calculate your stop loss. So you don't come in and lose money only one time. When somebody says I lose millions of naira, it means that this was not thought. The person may be taking trade, just buy or sell with lot sizing without proper risk management. So before you know it, you say Forex doesn't work. Forex works. Let's see somebody who has a good account. Let's say you have an account of $2,500. Somebody said, my book, is it an app? myfacebook.com. If they have an app, they also have the website. The way I entered there, when I went to Google, I just typed my position size calculator, and this particular book came out. So now let's say you have an account of $2,500 and you want to know how much stop loss you are going to use, how much loss size, what loss size to use based on this calculator. You click. You see, if it is $2,500 that is in your account, what you are supposed to use for this particular trade is just 1 mini lot. 1 mini lot. That means $1.30. So in case the trade is against you, what you are going to lose is just $75. That is it. If you are going to split this into 2, maybe you have 3 positions or 2 positions, you are going to divide this by 3 or 2. If it is by 2, what you are going to be using is 0.50 pips per lot size, which is this. Which is this. 5 micro lots. If you are going to divide this by 2, it's going to be 5 micro lots. So this is going to give you 50 cents per pip. Now, in case the trade go against you, you don't lose any money. So you don't have any reason to say you lose millions of naira in trading. That's because of this lack of this education. Let's say you even have $10,000 worth of accounts. Now you are beginning to grow. You want to risk only 3% of your account. Let's calculate that. That is when you can now start taking this kind of lot size. You see, this is not even up to a standard lot. Standard lot, everybody wants to trade a standard lot. because it's very easy to make money with a standard lot. But trust me, the way it is easy, that is how it is also hard. This one is not, this one is 55, this is $5.50 per pip. This is half of the standard lot. So with this, with $10,000 account, if you lose money, what you are going to lose is, if the trade is against you with this 54 pip stop loss, what you are losing is just $300, not all your $10,000. So even if you are losing 10 times, before this your money will finish, it's going to take some time. And of course, you can't be losing straight 10 times like that. Anyhow, you have this place. These people don't tell them so on the generator. So this place, this account if you have $10,000 account and you are losing 10 straight times, you cannot be out of the market. How many trades can one enter at a time? Sometimes it is tempting when you see a couple of trades that will make profit. Zero. So you don't need to enter trades all the time because you have, if your account cannot carry the trades based on the money you have in your account. If you have a $500 worth of account and trades are coming, they are tempting, you are not supposed to be risking more than 3% of your total account. So for what does that mean? It means that even if the trades are coming, don't trade, only risk those 3% of your total account. Do you understand? If you are risking 3% of your account, for instance, if you have a particular trade, for that particular trade, don't risk more than 3% of it. You are going to decide how much money am I going to lose for this day. Every day you have a ratio amount of money you are going to lose, you want to lose for each of your trades. So if you have an account of $10,000, this is just give me a few minutes. Let me fix this. Okay. We may go back to the device. You may log in again if this go off. Nah, this not which can you this early